Good morning, everyone. Steve Ankerstar here. Thank you so much for joining in. Welcome to the morning brief. Thank you so much for checking us out. If you want to join us in the morning, reach out to me at steve@ototnow.com and I can get you in on a free trial. You can check it out and go from there. As you saw in the intro, we're a group of investors that get together to try to slay the market every day by investing with military precision. What you don't see is there's a chat window and a question and answer window that's being populated by folks in the squadron that is off to the side. Unfortunately, you don't see that in the replay here. All right, our mission objectives are going to be grow our money, protect our money, and live off our money. Today, we are specifically talking for our tactical objectives are software companies. So Oracle, obviously, with the deal that's going on with TikTok and ByteDance, it has been in the news lately. So we're just basically going to review that and some other software names that I like out there and which ones I would invest in and which ones I'd recommend for you as well. So that's our main theme for today for our long-term investing stuff. For our question of the day, it's going to be, what is a direct listing? If you're following along in the news, Palantir, if I'm saying that correctly, PLTR, is going to do a direct listing next week. And that's different than doing an IPO. So we're going to talk about that today as to what is the difference there. All right, and again, that's September 30th. So if you want to get in on that, you need to pay attention. For an IPO, obviously, you need to list earlier for you to be able to get shares, that sort of thing. But this, you're able to buy it right away. So, all right, our flow for today is going to be long, short, open, short, long. What that means is we are going to talk long-term investing stuff first. Once we get within 10 minutes of the market open, we are going to switch to day trading, look at some opportunities out there. Obviously, the market was in motion yesterday in a big way. Today, starting out that way a little bit too. It was pretty tame until about the jobs number came out. But things are in motion, so we're going to benefit from that by trading it. We'll get through the open. We'll call the opening bell there. We will stay with our day trades that I will call out for you. And then we'll switch back to our long-term investing thesis and talk about Palantir and direct listings, and if you want to get in on what to do. As far as we're going to go around the world and take a look at the world markets, and we are also going to take a look at the headlines from today. And then we're going to talk about those 6 names, 5 of which are individual stocks. And then the last one is, of course, the index fund, if you're an index fund type person. We'll get into day trading and get into the question of the day. For contingencies out there, if you're having any issues getting online or anything, I have staff standing by. Reach out to steve@ototnow.com and they'll be able to help you out. And finally, a disclaimer for this presentation. This is an educational presentation, so I do not know your personal situation or anything about it. So you have to make your own, do your own due diligence before you act on anything you see here. All right. Let's get started with up to TD Ameritrade platform of Think Pipes. It's Thinkorswim if you are a TD Ameritrade customer. So sharing that out now. All right. Starting with the 1 year in review, what you're looking at is the SPY, which is the S&P 500 chart. That is 1 year from left to right. The red marks are approximately the middle of the months. For each of those. You can see we had the big run up going into February highs. We had the COVID scare, declaration of pandemic, all that stuff. Biggest drop in history, basically 35%. March 23rd was the low. Remember, I called lock and load on March 22nd. Basically a V-shaped recovery from there until recently. We've fallen out of this channel. And if you caught my presentation last night that I sent out to clients, as well as my other lists that are out there, including a podcast out this morning with an audio version of it, you'll hear what I'm talking about exactly right here. So, it was a big move down yesterday, but realize the 2 days before that had both been up. So literally at Wednesday close of business, we had lost so much money that we went all the way back to where we were on Monday. So I knew people would be concerned because it was a big move down. But don't worry about it. It was the kind of big picture out of that. Now, when you talk about where are we going to be for the election, I don't have a crystal ball, but I am investing as if the market's going to be between this 300 and 320. So continuing to descend on down. and that's okay. We're going to hold best of breed through this. We're going to get out of anything speculative that we're in. We may buy some volatility stuff. You've seen that pop up in your portfolios, and we'll hold that and look for times to peel that off and make some money on it. If the market does come in, don't forget that every market sell-off brings opportunity. So why did we make a killing this year? Because the market basically crashed 35%. That allowed us to capitalize on the upturn. Same thing, I don't care who you're supporting in the election. If the bad guy, which is the other one that you're not supporting, I guess, gets elected and the market crashes, well, hold your breath. Everything's going to be fine. We'll be scooping up stuff on sale, and it's going to turn around and go back higher at some point. We just don't know when, but we'll watch it every day like we do. All right, so let's go zoom in a little bit to the past 5 days specifically. When I talk about this was the end of the day yesterday right here, and you go back, yep, this was Monday. So again, not a huge deal. Here's where we are. Again, I talked about everything was fine when I got up this morning. But yeah, it's been pretty well read all the way. So we're going to have a negative trend going into the open, which means obviously we're going to look at some shorts going into the open as well. As far as earnings that were out, let's see, we had Darden Restaurants out this morning. That was kind of nothing really. I mean, they were kind of just hit their earnings, nothing spectacular. We do have some other names that missed. Accenture missed, they're down 6%. We'll be taking that probably as the primary short. And then RAD, which is Rite Aid, down 6% off missing earnings as well. So we'll keep an eye on both of those names. After the market today, Costco should be killing earnings. They have a strong online business. They've been doing everything right as far as getting people through and to and through their store. So I think they shall crush earnings actually, and probably be a good news story going into tomorrow. So if we do sell off today, a pattern that has kind of been around is big sell off on Wednesday, sell off Thursday, and then somebody like Costco comes in and doubles their numbers out of nowhere and everybody gets happy. And then we have a rip your face off Friday that goes straight up. So we'll see what actually happens, but that has been a setup that we've seen a couple times this year. All right, that's our day trading chart. We will come back to that in a minute. Let's go down to cnbc.com first to check in the markets around the world. Get my cursor in the right place. There we go. Let's refresh, see where we are. So headline says we're down 200. Yep, that was kind of the max. It's not quite down as far right now. S&P off almost 1%. NASDAQ a little over 1%. So, yep, in the red. EU is in the red. I think that was more of reacting from our market, the U.S. market on yesterday as well. Pretty much in the red across Asia, so no help there. Here were our numbers from yesterday. You see the VIX. VIX is up over 30. You know how we invest in that with the VXX. I'm looking at it right now. The VXX is sitting at 27. We did talk in the room one day about why those don't travel one for one. Well, they stay pretty close. So do expect if the market continues to sell off today, VXX, if it hits 30, I'm going to start shaving some shares. I've already sold some earlier this year at 31 and 34. I'm happy with those exit points. But then again, it came all the way back down to 24, so I wasn't all that happy with it then. But if it minute goes up, that's, again, it's a hedge, so we're going to make money in that particular investment while we hold the rest. All right, let's check out bonds. Not a lot of movement from when I looked earlier. Oil, again, trying to get back to that 40 to 60 range. Precious metals, again, what's been interesting, they've been selling off. You know, silver's been kind of selling off hard going into the election. Again, most people will think these things would be on the rise. They're not. So when everything is in the red and selling off, that means people are going to cash, like we talked about. All right, let's get back to the main page. We'll talk about some headlines. First of all is the jobs number. It was worse than expected, but not a lot, right? So these come out every Thursday morning, and then we'll have the unemployment number officially tomorrow to talk about. It totaled 870,000, so we're out of the millions, which is good. The expectation was 850, so come on, man. In big math, yes, it's worse, but not pretty much in line, if you will. So we shall see. There's been some other big kind of headlines out here. Here's another headline that has to be worse than it actually is. So again, the media sometimes goes for sensationalizing the headline. Trump won't commit to peaceful transfer of power if he loses the election. Okay, let's talk about that for a second. The absolute worst scenario of the four scenarios, so you've got a Trump win and a Biden wins. Both of those are pretty clear cut. Don't care which one you support. There's the nobody wins, which is a bad issue, or somebody wins and the other person doesn't accept it. Those both are going to hit the market pretty hard because that's going to scare the crap out of everybody and people are going to want cash if that happens. So I did not read this article. I cannot imagine that that's exactly what he said. I would imagine that he said, unless he can prove that there should be some proof that the election was actually legitimate before he cedes power. But we'll see. We'll dig into that a little more later today when I get a second. All right. Germany, Italy, talking about second waves. Again, we'll be watching that closely because we'll see how they handle that. Nikola to underperform, that's a downgrade. They're off 10% this morning. Their CEO resigned earlier, so it's a complete train wreck. So we'll be looking at shorting that, making a little bit of money. All right. Stimulus checks back in the news. I do actually think we're going to get stimulus. I talked about it a little bit last night in the presentation, but it's going to be a political football and everybody's going to be anxious to put money in all the voters' hands so they come out and vote for them. So I think there will be stimulus, there will be checks going out, and we shall see. Now, every 2 weeks for the next 2 months, it's like, come on, Mr. Cuban, or Mark, if you will, or Cubes if we're tight. But, that's a lot of money. I don't know. That's basically universal basic income, which is a whole separate story. So I'm not sure that's exactly what we need. Olive Garden, that's DRI that we talked about. Here's some other names, Penn, that we will be looking at. They're off 6%. They got a downgrade. And Battery Day, still Tesla's still in its hangover from Battery Day. So it's been selling straight down from Tuesday when they had actual Battery Day, which was bad. They're down at 360 right now, so off a couple percent pre-market after being down yesterday and down hugely the day prior. Okay, that's it for enough of the headline review. Let's start talking about our long-term investment theme as software companies. You know that I like best of breed. You know that I like companies with a moat around them. You know that I like high margin, highly addictive service. So when you think of software, it kind of fills the bill. It's not necessarily addictive, other than once you get used to using a certain set of software, you're going to pay for that till the end of time. I know somewhere along the line, I once a year cut a check to Microsoft for like $100 to have Word and Excel and PowerPoint and all that stuff. Yeah, I'll do that forever, I guess, because I don't know what else I would do without those things, right? So you can call it addictive in that way. And once you develop the software, you can scale, and it's high margin after the initial cost of development. Then you have to run patches and all that, but generally it's high margin. So when you look at companies like Oracle, and we're kind of talking about them because they're in the news with the whole TikTok thing. If they're talking, TikTok headquarters being here in Austin, okay, that does make sense. We're heavy in tech. It's Silicon Valley's obviously first. Austin's kind of next. Denver's now a close third. A lot of folks from the tech world are looking at that. But yeah, I don't know, 25,000 jobs. I don't really see that. But anyway, a lot of software out there is making a lot of money, and Oracle's behind that. So when you look at, here's where they were going into the sell-off, sold off hard down to 40. And they've already gone up 50% basically in the retracement. So is it a good time to buy Oracle? They're technically undervalued. When you look at PE ratios, and Tesla's is 800. Your normal PE value is at 18 to 21%. You could argue that they are fairly valued now, but guiding down towards being undervalued. So earnings now $3.19 a year per share. They're projecting $4.56. They do pay a little bit of a dividend, so hey, I like it. Let's look at some other names out there for us to like, and the second one is Salesforce.com. So when you look over here at this chart, Oracle's in the upper left. This is Schwab Street Smart Edge. that we're looking at. You have Oracle upper left, then you have CRM, which is Salesforce.com. They just got added to the Dow. What was that, 2-3 weeks ago? Crushed earnings. You can see the big E there. So overall, they're doing things right. They got a little bit in front of themselves. They've been selling off, so it looks a little bit like Apple's chart. Don't even sweat that, because this company is best of breed. It really is. Mark Benioff is the CEO, very charismatic, slick talker, but he's trying to make the world a better place. So I believe in Salesforce, and I would recommend that one. Adobe, yeah, it's a good looking chart, and it's recovered. I think it's overvalued here. I wouldn't touch it. VMware has a lot of internal issues, so I wouldn't necessarily go anywhere near VMware. I've always liked Intuit, though, and I like the entry point here. Intuit, remember that they have the suite of TurboTax, QuickBooks, and Mint for personal finance. I use 2 of the 3. I don't use Mint because I have a professional software for that, so I can do my own stuff through that. But yeah, Intuit's always interesting. I don't think TurboTax is going to get knocked off the top of the ledge anytime soon by any of the competitors like H&R Block or other knockoffs. Again, if you're not an individual stock investor, you can take the software as a service index fund, which is XSW is the big one out there. You'll pay a little bit for the privilege of doing that, so it's not quite as efficient as individual stocks. But if that's how you want to play it, and obviously you can see that it's done well as well. All right, and you can see up here we're talking to Oracle and Walmart and the fate of the TikTok deals going on. So that's really capturing the news cycle right now, and more to follow. All right, let's go switch to our day trading hat, and we're going to look at some specific names. The market's, again, trending down this morning. So we'll look at the shorts first. I've been doing long first, then short. I think I'm going to look at whatever's likely first to give you guys a little bit more of a time to look at it yourself, set your chart up, and then set up your tickers and everything. They're ready to go. For anybody that's new, we're using a gap and go strategy. So you can check out OTOTnow.com if you want to know more. Basically, we're looking for stocks that are moving at least 5 to 10%, one direction or the other. If they're moving down, we're going to turn around and short that. So again, the 5 to 10%, the theory is it continues down, and it does. That's why I use this. I wrote a PhD paper on it that I could not get published because I did not want this information getting out. The specifics of it, I only share the generic part here of what I learned in that study. But going long, if something's gapping up 5 to 10%, then we're going to take that long. So that's the basics of the strategy. We're going to talk in risk units. If you don't know what that is, just hold on for today. And then after we're off air, go to my website and OTOTnow.com and read about a risk unit, and you'll understand. But basically, we're trying to make 3 R's, which is 3 risk units, to risking 1 R. So if it's $100 you're risking, you're trying to make 300. I use a 350, risk 350, trying to make 1,000 for each trade. So that's the math behind it, and we're very diligent at how we execute this. So let's look at the things they're shorting. We talked about ACN, Accenture, missed earnings this morning. So we're looking for 100,000 of volume. It's pretty light here, but it'll fill by the time we've got 10 minutes prior to the open. So they were at 230, missed earnings, and they are down here at 216. So where they were a couple months ago. So, okay, that's okay. I'm not in love with this chart, but it's certainly something that we will want to keep an eye on. And we'll have to wait for the vol. So I'll put that in my notes, waiting for the volume. And revenue forecast, it's pretty small depending on your screen. Down here, short of analyst estimates. All right, next one that also missed earnings is Rite Aid, RAD. It does have the volume. It was at 1335, which is right here. It's gapping down to 1292, which is right here. I do like this chart because what's this? It was down here, 8 days ago, 10 days ago? So it has plenty of room to run. So it's going to go to be my number 1 now over Accenture. So let's see what we have over here. Rite Aid topped expectations, revised annual forecast, and their stock's getting hit. So they made some adjustments. So obviously investors are not liking that. So we shall see how that plays out for Rite Aid. Penn National Gaming is a headline. This stock has been on fire along with DraftKings and LCA and all the other online gamings. companies, 330. Plenty of volume. They were at 69, gapping down to 63. Plenty of room to the downside. 14 million share offering. Let's see if we can figure out where that price is. So they're diluting their stock. And I'm searching for the price. It's not jumping out at me. Price target of 62. That's not helpful. All right, put it in the chat if you happen to see, if you like wanting to short pin gaming here. If you happen to see it, throw it in the chat for the actual price. So that's a secondary offering. It's right in the gapping down 6% though, so I do like it, and the chart looks good. AWK is American Water. It's down on a headline. Waterworks, no volume, doesn't trade after hours, which can be interesting, right? We took one of these, didn't trade after hours, and as soon as it opened, you take it, you hold your breath, and off it goes. So let's see what we have. Saying gapping down earlier, pin AWK awarded a DLA contract. Well, that doesn't, I don't know why, unless they got hosed over in the contract. We will not be taking that right away because we don't have the headline to support it or know enough about it. All right, NKLA, Nicola talked about this earlier. This is based off a downgrade. It's got 2 million in volume. 21 is where it closed. 21.15. It's down here at 18. It's basically in free fall. The risk you run with a stock in free fall that's way down here is at some point in time they need to short cover. So I'm looking on another screen right now to see what the short interest is in NKLA. It is only 8%. That's not bad. So I know Burner, I think you had trouble getting NKLA the other day, so that might be an issue again. Yeah, the target raised, but there was the share offering. The price is what I'm curious about. They're diluted. They issued a bunch, or they're going to issue a bunch of shares, and that has to come with a price. So yeah, otherwise, I mean, I like shorting the NKLA, but I don't think we can touch it down here. It'd be too unpredictable. So out of the shorts, I like Rite Aid first and Accenture second. Let's look at the longs. Have BB. So BlackBerry up 9%, plenty of volume, 480 up to 507 is where it's sitting right now in here. So that's an earnings beat for BlackBerry. I kind of like the chart, but I don't like the market supporting a long here. So not my favorite. Jeff, I think that's Jeffries Financial. 50K in volume, 17 up to 1893. Look at these spikes it's had before. They haven't lasted, that's for sure. Jump in third quarter revenue. So that's low volume. So we'll have to circle back to that. MEI, I don't know what MEI is. So Methode Electronics, low volume, can't take that. They're up 6%. All right, you've got three pharma names for you. Thanks, Burner, for looking at that. No price. I couldn't find it either. All right, let's look at VRCA. They are long on clinical trial news. Verica Pharma, yikes. They don't really trade pre-market, so this might be an opportunity. 793, 845 on some good news. Looking down here to see what it is. Announces publication of results from phase 3 CAMP trials. Is that what I said earlier? Clinical trials. Yeah, I found a longer headline earlier. We may stab at this one. Again, this is where it doesn't trade after market. So right at the beginning, hold on, it can go. So I'll put that up there as an option. CPTX is another pharma name that got a fast track something or other. CPTX, Bueller. All right, we'll skip that and cycle back to it. CODX is a different pharma that has a test that came out. So it has the volume, 1345 to 1406. Right here, this does have room to move. Let's see, plans to launch COVID test kits in October. So I like this. 14 pre-market. This is better than the VRCA. So it's gapping up 6% right now. So that'll be our long option if you want to take something long. Or if you're in an IRA and you want to, where you can't short, then take this long. Or if you go to put in your short and it says no shares available, then it's good to have a long to flip to. So I like the story here. All right, 3 minutes out. Let's look at BBBY. Bed Bath & Beyond is up 5% on an upgrade. So just an upgrade. I wouldn't touch it here. All right, going around our tabs real quick. 2.5 minutes to go. Some names that moved too far. Not going to touch any of those. I did see the NKLA there. All right, looking at the volume. Nothing in the heart of the envelope there. Here's the volume. Tesla 2 million down 5% now, falling like a rock. You could grab that and short it if you want it. I'm not going to. I have experience with not doing well there. There's Jeffries that we looked at. There's the MEI that we looked at. Okay, let's switch over now and set our screens up. So the number one short's going to be RAD. Number two is ACN. And the long is going to be CODX. So we have the SPY on the left. We're going to set up RAD here. These are kind of my priorities from left to right. ACN, and then your long is CODX. All right. Want to back these out just a little bit so you can kind of see where they've been, and we'll talk entry points and stops. Remember, we'll take it when I say to take it, and then you need to immediately put in the stop that's working against you. So you minimize your losses if your trade goes against you, and that does happen. So this is a short. So we're looking at, I like the entry here. We'll need a, probably a 25-cent stop on Rite Aid, maybe 20 if we can get it. ACN, this is a short, probably $2 stop on ACN. We'll see how it opens, and then off to the right, we're going to need $14.50, 30 cents on the right. Okay, so welcome to the on time, on target trade of the day. 4 screens in front of you. We have the SPY off to the left. That's a 1-minute chart, so we can watch the market open. We have Rite Aid. That is a short. We'll be taking it and going short when I call it. Accenture also going short. And then CODX, the pharma name, going long with some new trials. So with that, here we go in 3 seconds. All right. So we're going to zoom in on this here. Again, if it just falls like that, then you have to accept that you can't take that trade. So we shall see. Monitor, be patient, and look for a proper entry on all of these. All right, market going higher. So, all right, Rite Aid opened at $12.82. It's already dropped down 55. What's that? 60 cents, a little bit more. We would need to see this back up to cover to roll out again. All right, Accenture looks like it dove to 220 down to 216. Again, we would need to see that back up here before we could turn around and take it short. So can't take these yet, have to wait on them. All right, as far as our CODX long, you can see up here, it's up at 6.47. I do like this long. Woof. Is the market going to hold? All right, we shall see. Let's set up for a trade long here. This is the high of the day, so if it gets to the new high of the day, I'm not going to like the stop on this. It's got the volume. Market's starting higher. Let's wait on that. I'm not convinced that that's going to hold. All right. RAD falling like a rock. ACN falling like a rock. Let's look at some of the other names. There was PIN, was a short. Again, that's the one with the secondary offering. It backed up, but we don't know where the price range is. AWK had volume issues, still does have volume issues. NKLA just had gone down too far. Oh, wow, look at that sell-off, 80 cents. People are selling this. That's 1 million shares right there in the first minute. Fire sale in NKLA, that's a beautiful short, but we can't take it right there. All right, back to RAD. See how that's doing. It's basically selling off hard too. $12.8 to $11.8 move. Didn't get in on it. ACN, $2.19, $3 move here. These dojis though are showing strength. Tries to go down, coming back higher. Tries to down, coming back higher. So that's not setting up. I was waiting for 1440 to go long here. 677. I don't really care for this entry. Let's look at some other names. BB long on an earnings story. It is above $5, but I don't know. Can't take it there. All right, Jeffries, JEF. Was up at 10%, so that's kind of selling in. Okay, we're going to get an entry into Accenture here. So, all right, it's backing up. So ideally, we want it to back up here to the mid 218s. So again, this will be a short. So you have to kind of think this is a short covering here. So these are people buying shares back that already shorted, and they're taking profits from it. So we're going to again short it. Thinking out loud, if it comes back down to 218, we're going to take it short and then do a dollar stop up to 219. Okay, well, missed it. So the entry there, take it short here, take it at 217.65. And we're going to have to do a $1.50 stop up here to 219.15. So there's our stop-ish. Draw the arrow for down. It just slammed right through that 218. You might have gotten a better entry than me if you were staring at it. So we're in right here at 217.60, call it 65. So that would be 219.15 for your stops. Again, you always want to put that in first to protect yourself, and that's the 1R. So now we need $1.50 to the downside. So about that amount is going to take us down here to the 2016.15, if my math is correct. That would be 1R approximately, and then we can subtract, come on. All right, and then 217 is just $3 off of this, so 214.66, which is off our chart down here. So we'll keep an eye on that. All right, the market's turning red here, so you get 0.64, so a couple minutes of short covering and then down. Rite Aid still falling like a rock. We are not in that. We are in Accenture short, so currently we got in right here, so it's working against us. And then I had some other long names. Let's check back to our CODX and see what's going on there. This is the one we wanted to look at initially. Taking it long, and it is just not going long. All right. We will see how NKLA is doing. We have our stop in, so on our trade, if it hits the stop, you're out. You lost 1R, no big deal. All right. Nikola stopped the fire sale that was going on. Backed up basically 80 cents here. That's short covering. So then it might continue on down from there. All right, we are out of our trade there to hit our stop. So minus 1R for the day. So again, we take one trade, sometimes two. If it works against us, we're out of it and no big deal. When you trade to where when it goes for you, you make 3R, and it goes against you, you make 1R. You have to be right a little more than 25% of the time. I will say we're right about 50% of the time, which works out to a couple R a week if you took a trade every day. So, all right, let's look at some other names that are out there. Apple, finally getting some love, almost back to even on the day. I've got another screen that's got some names on it we're going to take a look at. Now we're switching out of the short-term day trading into long-term. Let's find some other stuff that's not much in the green. Verizon's in the green. Salesforce is in the green. We'll pull that up since I talked about it earlier. Yeah, it was in the green, just went back in the red while I was talking about, so not holding up too bad. All right, let's switch over to our main screen. Obviously, this is what's going on today here at the open. That's a 5-day chart you're looking at. Here are some names that I have on a watch list. That's why I'll talk about what they are. Shroom F is a penny stock, so don't get into these if it's not your thing. It's a psychedelic name. Clickstream is a penny stock. High risk. Doc is a real estate investment trust for medical, name I like. Take-Two Interactive and EA are both your gaming names. And then these in here that you see all the letters, those are options. SPXB is my bond holding, so that's what I'm putting money for safety. So it's not basically not moving yet today. It's low volume. Sometimes it takes a little while to get going. All right, so not too many names in the green. Let's look at the red names. FMCI, that's a penny stock, down 22%. Nikola down 20%. Shell down 16%. LCA, yikes. LCA is a gaming name that's going to be become Golden Nugget Online Gaming. That has to have a headline. I'm going to see if find it on another screen. LCA. Nope, no news at this time. So maybe it's up on CNBC, clicking over there. They're talking about Accenture. So don't know what's driving LCA down. Workhorse and Shell are both electric vehicle truck names, about both down pretty big. Tesla down now 7%. So look at the 5-day move in Tesla. So that would have been our short right there. So again, it was, what is this? 2 days ago, it was at 450. Now it's down to 350 and falling like a rock. Have fun. Congrats on Battery Day. DraftKings down 5%, another online gaming name. Kohl's, Airlines, Love, Boeing. So a lot of names down big. So, all right, let's go back to the SPY here and switch over to our direct listing. So coming out of this, back down to Chrome. Sharing that out to you. That's Nicola's chart I was just looking at. Okay, so Palantir, if you want to get in on IPOs, obviously if you do it the traditional way, you have to be an accredited investor, which means you have to meet salary requirements, which generally 200,000 to 300, 200,000 individually, 300 if you're joint. As long as you do that a couple of years, you are considered worthy of doing high risk investments. Or if you have $1 million in investable assets, doesn't matter how you got it, you could have inherited it. If doesn't matter. If you have that much money, then you are able to take more risk than the average retail investor out there. So those are SEC requirements that they put those out. They've updated it now to where if you are a financial advisor, you are also accredited, which that does make sense. But so the backdoor entry, what everybody's saying right now is, okay, so say you're not an advisor, and you don't meet the accredited requirements, but say you study this like all day long, right? So I'm talking to you folks that do this or kind of home gamers that you want to participate in an IPO. All you have to do is pay $65 and take the Series 7 exam with FINRA. That is the min requirement. And as soon as you pass that, you don't ever have to practice or go into business, but now you're a licensed FINRA stockbroker. So you're immediately accredited so you can hop in on IPOs. So for an IPO, when a company wants to go public, you raise a bunch of capital and you go through the investment breaks called the underwriters. And they take a look at your company, all your financials, and they build what's called a roadshow. And you work with the company to set your price range. Do you want an IPO at $10 or $100, right? And there's strategies that go with each. And then instead of an exact price, they put a range on it. So if you were to say, yeah, let's go with 10 million shares at $10. Okay, because we want to raise $100 million. So they say, well, when we take this on the road, we want the ability to move it. So they'll say 8 to 12 is the price range. So when you participate in an IPO, you don't know how many shares you're going to get. So if let's say Burner says, I want to get in on the next IPO, I don't care what it is, I'll say, okay, how much? And they're like, what do you mean, how many shares? I'm like, no, just how much. So if you say $10,000, you will get whatever shares that equals out to once the price is determined. The price is often not fully finalized until the morning of. So 2 months out, you could commit your $10,000 to it, and then the price, you'll see it in the news, can be scheduled higher or lower based on demand. And then when it opens, that's when you get your shares at that price, at the opening. Most of them open around 1 o'clock Eastern, 12 to 1 o'clock Eastern time frame. And that's when you get allocated your shares. And that's when the math is done, so you know how many you have and your exact entry point. From there, it trades on the open market. It can go up. IPOs generally go up. This year they've been doubling no matter who it is. Billy Bob's truck company would double in an IPO this year because people are a little optimistic, I think. But so they don't always do it. I mean, Facebook went from 20 up to 40, above 40, cratered down to 16. I mean, it can be a house of pain. That's why you have to be accredited. So that's a normal IPO. Normally, if you get IPO shares, you are locked in, sometimes up to 6 months where you can't sell those shares because they don't want you dumping them. So imagine being on the Facebook IPO and high fives with your friends because you all doubled your money, and then you're watching the stock crater and you can't sell. And it goes all the way down to 16 where now you're down money and you're locked. You can't sell. So there's a downside to participating in the IPO as well. So that's kind of how that works. The direct listing process, which is what Palantir is doing. Now, Palantir is a very controversial company, software company, or I'll just say tech. You can read about it on your own. But they're doing a direct listing, which means they're basically coming up. They aren't fully using an underwriter. They have to do somewhat to get it all structured. But it's very low cost, and there's some key takeaways now. Can't see it here. Basically, you come up with the shares, and then all of a sudden they list, and the company retains ownership of the shares. And then as they trade on the open market, the company releases those shares basically like it does in a normal stock market, if you will. So if there's 10 million shares to be had, Palantir will have those shares, and they will have a trading desk that as the stock opens and goes up and down, they will be selling those shares out into the public. That's creating the market or being the market maker at that point. If there's a lot of demand, then the share price will continue to go up. If there's not, they will either hold those shares and eat it and wait for a better day, or they'll continue to sell those out along with whatever strategy they have in place, which is obviously internal to the company, but we don't know about. So that is a direct listing. You do see this from companies every now and then. Now, what we've talked about already this year is, this is a little outdated. It says there are 2 methods for a company to raise capital. No, there's a third one, and that's that special purpose acquisition company, which is kind of the craze right now, where you stand up a blank check company, you raise a bunch of money, and then you go buy something and change the ticker. Yeah. We'll see how long those are around. They've been around for a while. They're really popular right now. They're a little bit on the sketchy side, but I have made a lot of money in investing in them because they're also wildly popular. So that's it for the presentation for today. Thanks for the feedback on the video earlier. You can expect to see that on a daily basis right at the open to kick off the morning brief. And that'll get better over time. It's a little too long right now. It's at 51 seconds. But thanks for the feedback on that. No questions out there this morning, so I will let you guys go. And we will see you back on Friday. And yeah, market's recovering a little bit. It wasn't down where it was. So maybe we get back to the green today. Maybe they wait till tomorrow. So with that, I'm going to let you guys go. Thank you so much. Have a good one.